Back with Gino's Gem to revisit the AR High-Low. That's called the Archipelago Highs versus Lows. This is a great Gino Gem. It's an indicator I kind of put together years ago. Looking at internals, you have advanced decliners, you have, put call ratio. You have all these things that tell you if the market's starting to get weaker, lose momentum, gain momentum. One of my favorite indicators used to be the McClellan oscillator, where it measured how many advancers every day versus decliners, and if that ratio was dropping or growing. And then I started looking at, well, what about trends? What's the strongest trend out there that nobody can argue with? And that would be a new high. When you look at a new high, you have to call that trend bullish because it's making new highs. Buyers are making new highs. And a famous indicator that goes back to the start of the market's beginnings was the annual, what's making a 52-week high, 52-week low. But when something makes a 52-week high or 52-week low, sometimes it's overextended. It's been bullish too long. So we have indicators in there that let us know 1 month, not 52 months, or 52 weeks, but 1 month. And what's interesting about this is you can see how many stocks are on a monthly chart making a new high. And they actually have indicators for this on different softwares. And I'm on Thinkorswim right now. And I'm looking back about 2 years because if you look at the spiders here, we're looking at internals because we want a little heads up. Like here was our triple top back, the end of last year. And then we had this blow off top here, and then we went bearish. We sold off. So the breakout didn't last long. Was there anything internally warning, anything breaking down that this was going to happen? Was there any internals, that are kind of leading the market? And it's really hard to find a leading indicator. But a lot of times, not every time, but the new highs versus new lows. So when the market was making new highs at the end of the year right here, was it really technically internally there? So that was the 2001 end of the year as we turned over. That was the peak of the market this beginning of the year. So when I go to the AR highs up here, you can kind of see the highs and lows, but then you go and look at the lows. I said, well, what if we just put this indicator together? And that's the AR high 1 month minus lows 1 month. And what do you have? You have the net difference. You have the net difference. If it's a green bar above zero, the highs are winning. If it's a red bar below zero, the lows are winning. And when I come back here, you can see clearly on the 1 month that there's more lows being made prior to that blow off top right here. And then I started dissecting the stocks, like let's just take Microsoft, one of the big juggernauts out there. When I'm looking at Microsoft, where do I need it to be a 1 month high? When you look at Microsoft right here, a 1 month high, I look back exactly 1 month. This is the 1 month high right here. I put and just happens to be a double top. So that would be a bullish breakout and a bullish trend when it makes its 1 month high. But 1 month breakout, that could fail. That could fail. That could last very short term. But one thing that doesn't fail is when something's in a longer term trend, like 2 months would be right here. 3 months would be right here. And what I found is if you track the 1 month, it kind of gives you head fakes too much. But if you go to the 3 month, like right now, we have 35 new highs on a 3 month, and that's out of 8,000 stocks, not very many. And then you go to how many lows on a 3 month, we have 48. So if I put those together, that's the indicator right here, the AR high-low on a 3 month. We take the 3 month new highs minus the 3 month new lows. So basically, another way of saying it is this: how many bullish, strong bullish trends versus strong bearish trends? Because if we're not making that many new highs, the market's not going to be bullish enough. And if it's not making a lot of new lows, it's not going to be bearish enough to even be a trend you want to play. So when you go back on the indicator here, we put this on the newsletter and we mark it for you, and I read it for you. You can see here, we had a bear warning at the end of the year here. Bear warning, a lot of new lows were in place. We barely had a little bullish signal here, and then went right back to bears. And we need a few of these green candles over a certain number for us to go bullish. We've only had one bullish signal this year. So bottom line, where are we now? We're in neutral. We're in neutral. We're not making hardly any new highs or new lows over a 3-month confirmed trend status. Looking at 8,000 stocks, we're right here. And if you look, it's been since mid-August till now. You know, we're stuck in this range. So when I do get a couple of green bars above here, first thing I'll do is I'll look at the AR 1 month, and we've already got a couple there. We got a couple there. And I'm looking at this moving average. It's almost up. This moving average has to get above this green line. And then when I look at the 3-month, the moving average is not close to being neutral, and we still need a green bar here to be starting to favor the bulls. So we're kind of in that neutral zone, and that kind of explains our ranking situation on the gridiron. That's just one of my internal indicators I look at, but I'll tell you, it gives you a heads up. Once again, like I started the conversation, it gives you a heads up that weakness is coming after a long sustained bull rally. And now we're starting to get a heads up that the bottom might be fading. And once we get to this week, we'll update this and let you know. There you go, guys. That is the ARHI High-Low Indicator I developed. It's on the newsletter every week. Check it out if you haven't seen it. Any questions, email us or join us at team@tackletrading.com. There you go.